straight to our top story tonight. The country will have a new bankruptcy code soon. The Lok Sabha today passed a new law which will replace a maze of legislation and drastically reduce the time to settle bankruptcy cases. The new law proposes clear timelines for filing claims in debt recovery tribunals and courts. There are provisions to protect the interest of the workers by ring-fencing their PF and gratuity money. In a major cleanup act, the new code prohibits a bankrupt person from holding any public or government office.
Speaking exclusively to ET Now, Minister of State for Finance Jayant Sinha said the new legislation restores the balance of power between promoters and creditors. He also said that the new law will help banks to deal with NPA mess in a far more effective way. But not everyone seems to be convinced because former RBI Governor, Deputy Governor that is, K.C. Chakravarti says that implementation will be a big challenge and the impact of the new law on bad loans will perhaps be minimal. But the new bankruptcy code will face the real test only next week or in the few coming days when it is placed before the upper house, that's the Rajya Sabha, where the government is in a minority and there is a huge political logjam. The much-awaited bankruptcy code and its impact on banks and Indian economy, and more important, to India's ease of doing business list, is our top story right here on India Tonight.
It's the Great Indian Bank Loot. 7,686 willful defaulters owe PSU banks over 66,000 crore rupees. And at a time when India's PSU banks are reeling under the bad loan mess, the new bankruptcy bill that the lower house approved today comes as a fresh lease of life. A law that will make it as easy to wind up as it is to start up. The landmark legislation seeks to cut insolvency resolution to 1 year from 4 years, prescribes 180 days to complete insolvency process through the help of insolvency professionals that will conduct this. Information utilities will collect and disseminate financial information, and the National Company Law Tribunal will adjudicate the insolvency process. The bill also prescribes that foreign assets of insolvents be seized and promotes cross-border insolvency via bilateral pacts. PF and pension funds will not be included in the liquidation of assets, and worker dues for the last 2 years will get top priority. Moreover, no public office will be declared bankrupt.
This bill will enable a more easy flow of credit into the market, and it will see the rise of bond market. People don't have to depend upon the banks for raising finance. This will encourage a lot of youngsters to go in for a lot of startups. And we also recognize that market failures are normal things, and people should not be penalized if something fails, unless of course there is some dishonest intention.
One of the biggest impacts of the new legislation that replaces some 100-year-old archaic laws is the pace at which it will help India climb up the ease of doing business rankings, especially if it becomes a law before May 31st. It will also help detect a default sooner in the system before it begins to rot. The real test of the bill, though, will be the passage in the upper house, where the standoff between the ruling and the opposition factions threaten its future. Ruchi Bhatia, ET Now, New Delhi.
All right, now let's get you a top view from New Delhi. Then Minister of State for Finance Jayant Sinha spoke exclusively to ET Now after the bill got passed in the Lok Sabha and said the move will remove one of the biggest hurdles in improving India's world ranking in ease of doing business. He's also hopeful that the bill will go through the Rajya Sabha next week as well. Here he is in conversation with ET Now's Gauri Dwivedi.
There are many ways that you can avoid being in default and being in bankruptcy. If that does happen, it does demonstrate, as far as the promoter is concerned, I would say a lack of responsibility, and therefore we do believe that there should be some consequences for that.
The NPA problem currently is extremely huge. How will this actually tackle the entire NPA mess, and how will it actually go about distinguishing between willful defaulters and those that suffer due to an economic downturn?
Our thinking is that as the bankruptcy ecosystem, this infrastructure comes into force over the next year or two, then we think the likelihood of NPAs will in fact go down quite a bit because of course, as I've said earlier as well, there will be the ability to do a preemptive default, creditor rights will be much stronger, and so promoters will be less reluctant to pay up and so on. And so therefore what we see this bankruptcy legislation, which is a transformational legislation for India, to really prevent NPAs in the future and help us in working through resolution very quickly.
The bill talks about attaching foreign assets of bankrupt promoters, seizing them as well. How realistic is it? Is it even possible? Will money actually flow?
It's increasingly becoming more realistic. As you know, we have been working through the G20, the OECD, as well as with the UN, and all these multilateral fora that we are working with are working very closely and collaboratively together to ensure that cross-border issues of hidden income, hidden assets, bankruptcy are resolved in a smooth way. And what they have told us is that if we have good legislation in India and we follow due process of law, then it becomes easier for them to cooperate with us and work with us in the attachment process.
Last question to you, sir. This bill also has to pass the test of the August House, where of course there is stalemate, and could this really be the casualty of the animosity that exists right now between opposition and Treasury?
Well, the August House has become, as you know, the Augusta House. But nonetheless, I think the approach that we've adopted to have a joint committee of Parliament with both Lok Sabha and Rajya Sabha members, and then to take their excellent recommendations and accept them in toto, I think has built strong support and ownership across the aisle for this. And so we're very hopeful that
insurance took 6 months. So.
That we're very hopeful that early next week we'll be able to pass bankruptcy and make this transformational legislation law in the country.
All right, that is indeed Jayant Sinha in his first and exclusive conversation after that big legislation was passed by the lower house. But let's keep it with Lok Sabha, because stress from the mounting bad loans is indeed worrisome, and that's a very candid admission being made by Finance Minister Arun Jaitley himself on the floor of the Parliament earlier today, a day after he told leaders in global finance that Indian economy will remain on a high growth path for foreseeable future. The Finance Minister did express the fear of missing out, citing the delicate health of Indian banks after a spate of corporate loan defaults.
Now, Minister Jaitley assured the Parliament that the centre will support stressed-out banks with more capital to boost lending and kickstart investments. FM also assured that the government will probe cases where loans were unethical and non-viable to start with. So here's a slice of his address to the Parliament earlier today.
Bank lending is essential for growth. Banks have to support growth. और बैंक्स में एनपीएस की स्थिति एक चिंता का विषय निश्चित रूप से है, और सरकार का ये दृढ़ संकल्प है कि बैंकों को इस परिस्थिति में से बाहर निकालना है, और उसके लिए ये सरकार पूर्ण रूप से बैंकों का समर्थन करेगी। बैंक्स में कैपिटल और डाला जाए, पिछले वर्ष भी हमने डाला था, इस वर्ष भी डाल रहे हैं। बैंक्स की मैनेजमेंट को प्रोफेशनलाइज किया जाए। ये जो एनपीएस की स्थिति है, इसमें कुछ मात्रा में तो ऐसे लोन्स भी हैं जो शायद गलत आधार पर दिए गए होंगे, उसकी अपने आप जांच होगी। कौन जिम्मेवार था, मैं उस दोषारोपण में नहीं जाना चाहता, लेकिन इसका एक बड़ा कारण है और हम सबको राजनीतिक क्षेत्र में इसको जिम्मेवारी से समझ लेना चाहिए कि जब विश्व में मंदी का दौर था और बिजनेस साइकिल्स कुछ क्षेत्रों के कमजोर होते हैं, तो केवल वो क्षेत्र कमजोर नहीं होता, वो सेक्टर कमजोर नहीं होता, उसकी कमजोरी का बैंकों की बैलेंस शीट के ऊपर भी प्रभाव पड़ता है। इसको हम ट्विन बैलेंस शीट प्रॉब्लम कहते हैं। मैं उदाहरण के तौर पे, जैसे स्टील के क्षेत्र में एक बहुत बड़ी चुनौती थी, सबसे बड़ा योगदान इन एनपीएस में स्टील सेक्टर का है, क्योंकि अगर हमारी कंपनियों का स्टील नहीं बिकेगा तो स्वाभाविक है कि उन कंपनियों में तकलीफ आएगी, उनकी बैलेंस शीट में तकलीफ आएगी और वो बैंक का ऋण नहीं दे पाएंगे।
All right, keep it with more policy news. It's been an action-packed evening of policy breaks, really. The RBI today released the draft guidelines for on-tap licensing of universal banks in the private sector. The central bank has set an initial minimum paid-up capital of 500 crores, also saying that new banks must list within 6 years of starting operations. However, large industrial houses, they made it very clear, cannot apply for these on-tap licenses. Poonam Sani joins in with details of these draft guidelines. Poonam, help us understand, will we see companies like L&T Finance now jump to the opportunity, or will things be difficult given big industrial houses really cannot apply?
Well, in terms of the eligibility criteria, NBFCs can apply. Individuals or professionals in the BFSI space with 10 years of experience can apply. Not just that, private sector entities, for if at all the total assets are more than 5,000 crore, then the non-financial business part should not account for more than 40% of the total assets. RBI also mentions that large industrial or business houses are completely excluded to apply for the universal on-tap license, but they have permitted that they can invest in the bank to the extent of less than 10%. That means that if at all Mahindra Finance wants to apply, then the promoter holding should be brought down to less than 10% by the Mahindra group. On similar lines, even L&T Finance Holdings, the Shriram Transfer Finance Holdings, Cholamandalam Finance, Sundaram Finance, as well as a Bajaj Finserv, or rather a Bajaj Finance, these entities have a higher promoter shareholding. These entities, it may be difficult for them to apply, but watch out for an IFL Holdings, an Edelweiss, a Capital First, or an SKS Microfinance, or a Diwan Housing. These entities probably can apply.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.